All right, thanks, Phil. So now we're going to start pivoting and talking about the data center implications of hyperscale and how hyperscale is really driving the data center market. So you can't really separate hyperscale and data center nowadays. They kind of go hand in hand in terms of the trajectory of the overall industry and the market. So I'll kind of cover quite a bit of ground here in terms of looking at how COVID-19 has impacted the data center and hyperscale market, talk about the K-shaped dynamic that's in place, and then look at the digital infrastructure value chain and how that's a foundational layer moving forward. And then I want to spend some time specifically talking about cloud gaming and the huge opportunity that it'll present in the next 5 to 10 years in terms of infrastructure growth. And I'll tell you why. And then we're going to shift over to talk about global hyperscale cloud growth dynamics and the build out of that. And then move on to the data center colocation market, which is kind of our sweet spot here. And I'm going to do a very quick and hopefully macro job of giving you just a complete world tour of each of the data center markets within those 3 core regions: the Americas, Europe, and Asia Pacific. We're going to highlight some of the top markets that we think will outperform in each region, and then close it out by some key takeaways by region, and then we'll again have some time for Q&A where you can ask questions on this thing. So let's kick right in. And Phil talked a little bit about the tailwinds and headwinds. I won't go through that again, but obviously because of COVID-19, there has been industries that have benefited and grown tremendously from the work from home dynamic and the quarantine aspects. So e-com, video streaming, online gaming, digital payments, social media, remote work have all grown significantly, whereas more traditional industries that rely on in-person interactions like travel, hospitality, live events, sporting events, concerts, brick and mortar retail, dine-in restaurants that have also pivoted to delivery, online delivery restaurants as well. You have offices and oil and gas that have suffered notably because of the COVID-19 pandemic. And I think you're going to see that play out more throughout the year. And as a vaccine approaches, I think before it gets into general availability, you're going to see those trends stay in place. And you can argue that it's actually an acceleration of existing secular growth trends that were already in place pre-COVID-19 pandemic. And so that really helped to drive the awareness and the urgency from a lot of companies to switch to a digital first strategy. And that has shown reflected in the growth rates for SaaS, for hyperscale. And that, there's also, it's worth noting that for data center expansions, there's digestion phases, and then there's kind of expansion or leasing phases. So usually you'll see hyperscalers tend to move relatively in tandem with each other and lease chunks of capacity in a certain market, and then they'll go quiet for maybe a year or so to really digest the capacity that they're leasing, and then kind of re-up again as their adoption accelerates and takes up again. So I think it's always good to have that kind of mindset in place due to the lumpiness of hyperscale deals and the size of these deals moving forward. We think there's going to be a meaningful uptake moving forward from Chinese hyperscale platforms that are really just starting their international expansion plans outside of China. So look for that to accelerate moving forward. We talked about SaaS and unified communications exploding because of the work from home dynamic. And then, how the pandemic, because it's tough for the hyperscalers to build their own data centers in a pandemic environment. It really favors leasing from co-location operators versus building their own in certain markets. And then data center operators are getting smarter about how they cater to this hyperscale demand. So they're land banking in strategic markets, and they're streamlining and optimizing their supply chains. And then we've also seen many reports of remote hands and DSIM services and online portal tools seeing a huge spike in usage and are becoming more and more crucial nowadays and table stakes in the customer relationship with a data center provider. And so just on a very basic level, if you don't understand the way digital infrastructure works, is that so you have your consumer focused platforms or apps like Netflix and Zoom, Shopify, Slack, they all kind of enable digital e-commerce, online streaming, gaming, workplace collaboration, and their infrastructure has to reside somewhere, right? And it usually resides in 2 places, either one or the other, or a combination of both. We call that hybrid cloud or hybrid architecture. So they could have a primary deployment on a public cloud platform like AWS or Azure, but in some instances where where it's more kind of latency specific or performance sensitive, or whether it deals with very sensitive citizen data. There's data sovereignty, data privacy issues, or require them to have in country or in region physical footprints. So they will tend to deploy co-location footprints within these data center operators like Digital Realty or Equinix, AirTrunk, Princeton Digital Group, NTT Edge Connect are examples of data center co-location providers that have benefited from having diverse global footprints. And as well as if you look at the hyperscale cloud providers like AWS and Oracle and Microsoft and Google, they will either do a combination of two things. They will build their own data centers to satisfy their own requirements, as well as augment that by leasing capacity from these third-party operators like Digital Realty and Equinix and so on and so forth. So ultimately, the point I'm trying to make here is that all of this flows into the foundational infrastructure layer piece, which is at the end of the day is a data center. So I want to touch a little bit about cloud gaming because we believe it's going to be a massive market and massive opportunity for infrastructure services growth over the next 10 years. I know Phil talked about specific verticalized use cases for gaming, whether it be bare metal servers for gaming, specifically designed for gaming instances. But you're seeing hyperscale cloud players pour a lot of investment into developing these gaming platforms. You have Amazon with Luna, Microsoft with Project xCloud, Google with Stadia. You have Tencent with Start, and Apple with Apple Arcade. And then you have traditional gaming companies like Sony with PlayStation Now, which is a kind of an on-demand gaming platform. You have Valve with Steam that you can download games via a marketplace like Dota 2, a very popular game. You have Garena, which is more of a Asia-specific gaming platform that has seen a really robust amount of uptake and usage in 2020 because of COVID-19. And so I think gaming is especially unique in its infrastructure requirements because unlike video streaming or video conferencing, where it's just one-way route for content in a cache location being sent to your screen, gaming, you're not only having to stream very high resolution images or even videos, so 4K to 8K, but also the input output with multiple players playing at the same time in these battle royale modes. And so that'll require a lot of bandwidth connectivity that will require latency sensitive compute infrastructure closer and closer to the end user. And so that will drive a lot of, I think, data center capacity uptake in the future as gaming really starts to kick in, and this new generation of millennials start to adopt gaming even more. You're not just seeing gaming being a guy sport, but it's becoming more of a girl sport as well, as you see more and more girls start to take on gaming. So from a hyperscale standpoint, how does that impact the hyperscale demand trends moving forward as they think about whether to lease or build moving forward? So you have the tier one hyperscalers like Microsoft Azure, AWS, and Google, and they've consistently shown a desire and an appetite for leasing co-location capacity from data center operators. But I think AWS stands out in the fact that they have a consistent appetite for building their own data centers as well, given that they are the incumbent public cloud, and they typically enter markets before other providers do. And so they've, due to initially due to a lack of available hyperscale grade co-location capacity, they've been forced to build their own data centers and have been further ahead and become really good at doing so. So you see AWS as a consistent builder of self-built data centers in markets across the world, in Asia, in Europe, and in the US especially as well. Whereas Microsoft and Google, because they're still playing catch up to AWS in some respects, so they do primarily favor the leasing aspect of data center capacity, but they will build in strategic and selective markets where they can get renewable energy, ample amounts of land and power, and incentives from government. And so I think that's you're seeing playing out in very strategic markets across the world. And then you look at the kind of the lower tier clouds or the second tier public clouds like Oracle and IBM, and how they're still pretty far behind the top three. And so it doesn't really make sense for them to continue investing more capital and bandwidth into building real estate and acquiring land and doing permitting for construction and all that stuff. So they're better off prioritizing their capital and reinvesting that into building better capabilities on their cloud platform in terms of CDN capability, in terms of machine learning, AI, IoT, data analytics. And so I think that's why you're going to see Oracle and IBM and all the clouds that are outside of the top three public cloud platforms. They are going to predominantly lease moving forward as they look to invest more and more capability into the cloud platform versus in real estate that arguably is more of a commoditized aspect of the data center business. And then in China, and then for the Chinese hyperscalers like Alibaba, Tencent, Huawei, even those Chinese hyperscalers, while they do build their own massive data center campuses in mainland China, they've also trended recently towards leasing from third-party colocation providers. And that's evident in the results from Chinese companies like GDS and 21 Vianet and Chindata, all show a massive appetite from these Chinese hyperscalers to lease, even in mainland China, even in their home market. And then internationally, these hyperscale cloud providers are primarily leasing from third-party data center operators. So they are not building their own data centers as far as we know outside of mainland China. And so I think some of the other large content and Chinese cloud companies that I think are worth watching that do fall into the hyperscale cloud category are Kingsoft and ByteDance. And ByteDance is not a cloud per se, it's more of a large content and digital media platform, but is large enough to be able to be buying the chunks of capacity that hyperscale clouds are buying. So I would put them in that similar bucket, even though they are not traditional hyperscale clouds in the sense of the word. And Phil touched upon this earlier. We talked about how hyperscale clouds are decentralizing their footprints and filling infrastructure gaps on their map. So we'll move on from here. We talked about dual hyperscale markets in countries that are big enough to support that. So Japan, Australia, Canada, and Seoul are examples of that. And also not shown on this chart are India and China, the two 400-pound gorillas in Asia that are also having these kind of dual hyperscale or even triple hyperscale market dynamics. And then I want to spend some time talking about the interoperability between Oracle and Microsoft, because I think that's very relevant to the data center piece, as data center operators are really competing for these large hyperscale deals from Microsoft and Oracle. Is that I think Oracle and Microsoft, they're doing more and more tie-ins in terms of their infrastructure nodes, because they have these large enterprise customers that are approaching them saying, hey, I have these massive SQL databases with you, Oracle, but I also have big Microsoft O365 deployments as well. It would be great if they can be more integrated and more interoperable and talking to each other in a more integrated fashion. And I think that's why you're seeing this mandate from the cloud procurement team to have their compute nodes sit close to each other. And that's why you're seeing the advent of data center campus builds being more and more of a norm moving forward. And I think it's a good chance that if you already have a Microsoft compute node in your data center campuses, that puts you in a very good position to also win an Oracle cloud compute node, given that the round trip latency between both of these nodes has to be within 1 millisecond. So the greater the interoperability for these clouds, the more attractive a data center campus build out will be for operators moving forward. And so shifting gears into the global data center colocation market, Phil kind of presented the market revenue numbers, and I'm going to present the capacity numbers in terms of megawatts of capacity. As you can see, the Asia Pacific market is a relatively large and by far the largest region so far in 2020. And growing at a 9% CAGR. You have EMEA growing at 13%, and the North America market at 7.6%. And then you have Latin America, which is coming from a much smaller base, growing at over 25% CAGR in terms of capacity added. So it's, we're expecting the market right now to be just under 20 gigawatts of co-location capacity. And that's going to increase by at least 50% in the next 5 years to hit just over 31 gigawatts of capacity. So definitely there's a lot of demand for this digital infrastructure movement moving forward. And to give you a perspective on the split by region, we're currently, the North America and APAC region are roughly neck and neck right now in terms of capacity. But then I think as you move 5 years ahead, you'll see Europe start to catch up and becoming the leader in terms of data center capacity by region, and then Asia being a bit behind that. And I think it's just a function of how big the EMEA region is as a whole. You're looking at the entire continent of Africa, you're looking at the entire Middle East, and the entire continent of Europe as well. So you have 3 major continents there in EMEA versus Asia Pacific, where you have Australia and New Zealand, which are isolated markets, markets. You have the Southeast Asia region, you have the South Asia region with India, and then you have China, and then the East Asia region with kind of three main markets in Japan, Korea, and Hong Kong. So I want to take you first towards the Americas region, where we've published these market maturity index to give you a sense of where we think the 5-year outlook for some of these markets are within a specific region. So we'll start with Americas, and as you can see, a lot of markets there. But I want to draw your attention first to the red box, which is the tier 1 markets that everyone's very familiar with, and that's Northern Virginia being outperforming in terms of growth moving forward. It's going to be the marquee market in the U.S. moving forward. But then you also have other tier 1 markets like Dallas, Silicon Valley, and Chicago still pulling their weight from a tier 1 perspective. And then you also have these kind of tier 1 like markets that are going to soon be classified as tier 1 markets, we think. So Phoenix and Atlanta, not traditionally thought of as tier 1 markets, but I think Phoenix is more so thought of as a tier 1 market. Atlanta also, we're seeing a pickup in terms of hyperscale leasing in that market, and I think Atlanta will soon approach tier 1 market status as well. You also have markets like in Canada that we're actually very bullish on, and we've published some extensive studies that Ainsley and Phil have done on Montreal and Toronto. And so Montreal and Toronto definitely pulling their weight in terms of hyperscale. Montreal more so now due to the renewable energy and the land aspect of it, but I think Toronto will continue to benefit from the large amount of eyeballs in Canada. Then you also have the Latin America markets like Sao Paulo, Mexico City, Santiago, Buenos Aires, that have seen a lot of investment from companies like Digital Realty, EdgeConneX, and Equinix, all looking to enter these next tier of hyperscale markets, right, that are going to soon benefit. So if we're looking at it from a 5-year perspective, this is where we think the markets will rank over the next 5 years. And then going back to the US, you have Hillsboro that is emerging as a viable, very much viable hyperscale market due to its subsea cable connectivity from the US West Coast into the Asia Pacific region. And because of how important the APAC region is becoming, for US providers and hyperscale cloud providers, I think Hillsboro stands to benefit dramatically as a hyperscale destination. You have Las Vegas and Salt Lake City and Phoenix really being kind of these secondary markets that have emerged due to the land constraints and power constraints of Silicon Valley, and due to the high price points and the high premiums that you have to pay to locate your data center capacity in Silicon Valley, and that has benefited surrounding markets around the San Francisco Bay Area, like Salt Lake City, Denver, Vegas, and Phoenix as well. So I think those markets are key ones to watch moving forward for the Americas. So translating that into capacity standpoint, in terms of where the capacity is today, in terms of the blue section in 2020, and where we think those markets will end up in 2025. As you can see, Northern Virginia, the clear outperformer in North America. But you also kind of see a shift in Chicago gaining ranks. You're seeing a shift in Phoenix, Atlanta, Hillsboro, and Montreal, and Toronto, and even Salt Lake City starting to move up the ranks, like I mentioned earlier, in terms of data center capacity. But this gives you a sense of the scale and the size of each market relative to each other. So some key takeaways from the North America region. I think I've touched on all of these to some extent, but the tier 1 markets are going to continue to see stable and robust demand. I think you're seeing Canada becoming more of a focus, over the last couple of years with the Equinix Bell Canada acquisition, the Compass Root acquisition, the Vantage 4 Degrees acquisition, and more land banking in Toronto. You're seeing Digital Realty sign some meaningful hyperscale deals in Toronto as well. So I think Canada is going to be a very interesting market moving forward as part of the overall North America region. You have tier 2 markets, like I mentioned before, that could reach tier 1 status. And then we also touched on Northern Virginia being the US market heavyweight. So I'll circle now into the EMEA region. I know there's a lot more markets in EMEA, so I just wanted to draw your attention again to the tier 1 market section in the red box in the top right. And so we really have Frankfurt being the top European market and outperforming most of the tier 1 markets moving forward. I think that's reflective of the recent surge in hyperscale leasing that has entered Frankfurt this year. Iron Mountain is a case in point of a large hyperscale deal that they signed a 27 megawatt lease to fully lease the site in Frankfurt there. And that's indicative, I think, of the demand entering Europe. We think London will still continue to be a very strong market given what we've seen in Slough now in Docklands, and some of the new builds entering London. I think there were talks about and fears about Brexit potentially muting or negating some of the demand in London, but that actually has not been the case. We've actually seen the opposite happen. And we have an analyst in the UK, Sasha, who tracks that very closely for us. And she's actually told us that it's actually driven more demand into London and actually more demand into European markets like Frankfurt, Amsterdam, Paris as kind of dual locations in Europe to prepare for the Brexit situation. So I think that's been a positive overall for data center markets. I think we're expecting Paris to outperform Amsterdam due to the moratorium that has only just been lifted in Amsterdam, and also some of the supply, land and power constraints that we've seen in the Amsterdam area happen. So I think Paris has a lot of things going for it due to the fact that the next Olympics is going to be in Paris. That should drive a decent amount of surge in data center deployments and capacity in there, just like we've seen for the Tokyo market as well, given that they're very different markets, to be fair. And so also looking at the secondary European markets, we're very bullish on markets like Warsaw, Madrid, Milan, and Zurich as some of these key secondary European markets that have seen a lot of hyperscale activity. Microsoft and Google announcing cloud regions there recently this year, and you see investments from new market entrants like Global Compute Infrastructure, which are ex-Digital Realty investment guys, and they've planted their flag first in Warsaw. You've seen investments and acquisitions happen in Madrid. You've seen more expansions in Zurich. You've seen Data4 growing a lot in Milan. So I think those markets will be kind of that next tier 2 hubs in Europe that will end up looking like tier 1 hubs in the future. And then Moscow has been an outperformer driven by Chinese hyperscale demand going from Eastern Europe and then making its way into Western Europe as well. So Moscow has benefited from a lot of Chinese demand. Johannesburg being the outlier in Africa that has benefited a lot from hyperscale growth there. And then you have kind of these gateway markets like Marseille, Vienna, because of subsea cable connectivity that Ainsley will touch a little bit more on later today. And then you have some of these emerging markets like Brussels and Berlin being a secondary cloud region that was announced. And then Barcelona, we think Barcelona and Lisbon, the Iberia markets, are also very interesting for us moving forward. I think you may have noticed that Dublin isn't that far high up, and that's because this is a co-location market index and doesn't take into account the hyperscale self-builds that are present in the Dublin market. So we think from a co-location standpoint, Dublin will be a little bit outside of the opportunity quadrant just because there's more of these hyperscale self-builds in the Dublin area versus co-location. So that's, I think, the key markets that I wanted to point out in the EMEA region. As I said before, London, we project London and Frankfurt to be the primary beneficiaries of demand into Europe. London and Frankfurt both, London being more than a gigawatt market and Frankfurt approaching that gigawatt status, and Amsterdam and Paris, we still expect to pull their weight in terms of being truly flat markets for Europe. And then same kind of comparison, if you look at the way markets are going to outperform, we're very bullish, obviously, on markets like Milan, Zurich, Madrid, Vienna, Warsaw, even Oslo, for example, is specifically a Nordic market that we've seen a lot of data center builds and expansions and hyperscale activity, and then Berlin, Brussels, and Marseille and Barcelona as well. So those are some of the key markets that I would point you guys towards to watch moving forward. So just a quick takeaway, some of the key themes in Europe, touched on most of these already, but I think you're going to see continued investment into the European market. You're seeing a lot of US providers already making their way into Europe through M&A, and ex-veteran executives from data center companies starting their own platforms in Europe and Asia. So I think that's going to be helping the growth of the European data center market. And given how data center asset valuations are at sky high levels right now, you're going to see more and more transactions take place. And I think more telcos look to divest their data center assets. So I think those are some trends that we're watching as well in Europe. So moving on to our last region, APAC, before we wrap up for Q&A. So again, pointing you to the top right section where we look at the tier 1 markets in APAC. I think it's no surprise to you, those names up there. But I think what may be surprising is how much of an outperformer we expect the Tokyo market to be moving forward. I think if you look at the Tokyo market, which we'll go into more detail in the next keynote, it's going to expand and see a lot of hyperscale demand enter that market, partly because it's the third largest GDP in Japan. Japan is the third largest GDP in the world. There's no domestic Japanese hyperscale cloud platform. And so that's a perfect kind of breeding ground for both Western and Chinese hyperscalers to compete for market share there. And so if you've seen, looking at how Singapore and Hong Kong have really benefited from a hyperscale cloud demand standpoint, and Tokyo really just hitting that inflection point of being a more international data center market, I think bodes really well for its outlook over the next 5 years. Chinese markets like Shanghai, Beijing, and Guangzhou, we think will continue to experience really robust and stable demand, domestic demand, as the Chinese economy really starts to accelerate, and also being the fastest economy to recover from COVID-19. We think that bodes really well for those markets moving forward from a digital infrastructure perspective. And when I say Shanghai and Beijing, I'm also taking into account the surrounding markets, given there's power and land constraints in these core metro areas. There's also adjacent markets like Tianjin and Hangzhou and Langfang and Shenzhen, all kind of benefiting from growth in those general regions. And then shifting over to the opportunity quadrant, which is where we think the sweet spot is going to be for investments moving forward for the next 5 years. I think markets that we think can be tier 1 markets moving forward are obviously Mumbai and Jakarta. Huge addressable markets there that are still very nascent in terms of data center capacity supply. I think Phil and Ainsley have done a lot of groundwork in Jakarta, and we expect to produce a pretty detailed Jakarta report in the next month or so. So keep watch for that. Mumbai is kind of that major market in India with enormous population, over 1 billion people in India. And so we expect multiple Indian markets to really start to benefit from that growth coming into India. So gateway subsea cable markets like Chennai, alternative cloud regions, locations like Hyderabad and Pune being in close proximity to Mumbai. We think all those markets, and Bengaluru as well, being a cloud and IT hub for India, will all stand to benefit from that surge in data center investments entering the India market. Korea as well. I think Seoul is a market that we're very bullish on, given that it has very similar dynamics to the Japanese market. Japan, call it 5, 7, 8 years ago, was still very much a closed domestic data center market with just the local operators like NTT and KDDI and the local SIs like Fujitsu primarily dominating the data center scene there. But then it's really hit an inflection point, and a lot of international providers are now planting their flags in the Japanese market. And that's why you're seeing Osaka also stand out as becoming, also potentially being a tier 1 Asia Pacific market moving forward. And so Seoul, I think, will start to hit that inflection point from being just a very domestically focused market with incumbent telcos like KT, SK Broadband, LG U+, Samsung becoming, from them being primarily the dominant players. And then you're seeing Digital Realty enter the market. You're seeing Equinix start to enter in with partnerships. So I think you'll see that market start to open up over the next 5 years and start to hit that tier 1 status. And then other secondary markets that I want to point you guys towards is the Taiwan market. I think Taiwan is flown under the radar as a very viable Asia Pacific market. I think you've seen Google do 3 self-builds there, which is validation of its value proposition there in terms of land, renewable energy, very highly educated, technology-focused population. And then recently, over the last month or so, you see Microsoft announce that it's going to deploy their first cloud region in Taiwan, which also bodes really well for the Taipei market. So I think you're just going to see Taipei start to emerge as a very viable hyperscale market. And then looking into what's been happening in Singapore with the moratorium on data center development, you're going to see markets like Kuala Lumpur and Johor in Malaysia start to emerge as alternative locations to mitigate the supply constraints that are expected to hit Singapore if there's no lifting of the moratorium. So that's, I think, Asia in a nutshell. Some moving into what we call the JAS markets, or Japan, Australia, Singapore, Hong Kong, which is kind of the Asia equivalent of the flat markets. We have Tokyo, Singapore, Sydney, and Hong Kong still projected to do well in terms of capacity adds moving forward. Sydney projected to eclipse Hong Kong in terms of being the third market in APAC outside of China and India. So I think that's a good depiction of the amount of demand moving forward, and Tokyo obviously to outperform on a hyperscale side. And then same kind of comparison, giving you a sense of the size of these markets. Again, just reiterating what we've said in the market maturity index, which is markets like Seoul, Osaka, Mumbai, Jakarta, KL, Hyderabad, Chennai, Bangkok, all of these kind of markets that are benefiting from the decentralization of hyperscale into filling their infrastructure gaps on the map, I think plays a role in growth in the Asia Pacific region. So some key takeaways from the top 4 markets in Asia, I think touched on the moratorium in Singapore. There is still ample amount of supply for hyperscale in Singapore. There's 4 large hyperscale builds coming online, and I'll go into a little bit more detail on those builds in the next keynote. But I think that should have enough supply for the next year or two for the Singapore market before it really starts to become supply constrained. And then you're going to see more and more hyperscale demand from Chinese hyperscalers in the Singapore market, with recently Tencent and ByteDance announcing that they're going to make Singapore their regional hub for Asia outside of China. So I think that bodes really well for the Singapore market. Hong Kong, there have been some concerns about the Hong Kong market given the new security law imposed by the Chinese government. And there's some uncertainty around Western hyperscalers and how they feel about their data being housed in Hong Kong data centers now. And so you've seen hyperscale companies like Naver, which is the parent company of Line Chat, they've publicly come out and say, hey, we're moving our data center backups from Hong Kong into Singapore because we're concerned about this new security law. And I think the hyperscalers, the AWSs, Microsofts, and Googles are also possibly doing that to some extent, although they may not want to publicly come out and say that due to the amount of business that they do in mainland China. So they may already be shifting certain sensitive data outside of their Hong Kong data centers as well. So that may make Hong Kong more of a Chinese hyperscaler destination for mainland Chinese companies like a Kingsoft, like a JD, like a ByteDance to expand internationally, and Hong Kong is a great hub for them to do so. And then you're seeing a lot of data center builds coming online there. In Australia, we expect to continue to see stable demand from hyperscale cloud. There's a very favorable competitive landscape dynamics right now in terms of there's not a ton of operators there relative to Singapore and Hong Kong, but you have sort of regional national companies like NixDC and Canberra Data Centers and Macquarie and even AirTrunk you can consider as part of that bucket. And then you have international companies like Equinix and Digital Realty also doing well in the Australia market. And so Perth is also an interesting market moving forward to keep watch as a hyperscale gateway, purely based on the subsea cable connectivity. You have the ASC cable, you have the Indigo cable connecting Perth to the rest of Southeast Asia and to Middle East Africa. So I expect Perth to start to emerge as a hyperscale connectivity point. And then for the Japan region, we expect Tokyo's Inzai area and Osaka's Ibaraki district, which we'll go into more detail about, to be the primary beneficiaries of the primary hubs for hyperscale to deploying moving forward. There are some barrier to entries in Japan, which will keep speculative building to a more disciplined manner. And so I think you'll see a very healthy supply-demand dynamic in Japan market moving forward, just based on those constraints. So that's the end of this keynote. Wanted to save some time for Q&A before we move on to our next session. So I think Phil will join me in some of the Q&A questions there, Phil.